in Austria, OPEC plus ministers representing oil-producing countries decided to stick with supply cuts. This means that oil prices, which hit their highest in 5 months, could keep rising. Johannes Pleshberger reports from Vienna.
No easy time for consumers at gas pumps. Oil prices, which already trade at almost $90 a barrel, could go even higher given OPEC's latest decision. The world's biggest group of oil exporters and its allies are choosing to keep their oil supply cuts unchanged, at least for the first half of the year. This means that production curbs of around 2 million barrels per day will remain in place in the upcoming months. In a surprising move, OPEC ally Russia recently decided to reduce oil output rather than exports, to evenly share production cuts with other OPEC countries. Previously, Iraq too had promised to lower exports. The oil price reached its highest mark since October, driven by tighter supply, attacks on Russian energy infrastructure and war in the Middle East. This shortfall could now send prices toward $100 a barrel, which will mean higher prices for consumers and vital revenues for OPEC countries. Johannes Pleshberger, CGTN, Vienna.
More on what this means for energy markets, I'm joined by Carl Larry. He's Vice President of Energy Futures Clearing Sales at Marex. Thank you so much for joining us.
Thank you, Poppie.
So first up, Carl, your reaction to OPEC's output decision?
Well, it's an interesting one. I mean, really, when you think about what's happening right now, we're seeing demand pick up. We're seeing economies recover. China, for one, is on the road to growth and recovery. You're seeing the inflation rates starting to decline in Europe. And then the U.S. is trying to make its way back here in the summer driving season.
Now, OPEC has faced criticism for its influence on global oil prices. What factors do you believe drive OPEC's decisions regarding oil production quotas?
Well, the one thing you have to remember is that the U.S. has become the world's largest exporter, one of the major producers in the world right now of oil. And so I think that they're trying to balance it out right now. You know, OPEC needs their production to keep their revenues and their economies going strong. But when they see that little shift come in from the U.S. and start pushing barrels out into the rest of the world, they want to maintain their hold.
Now, as you've mentioned, there are many global producers of oil. So at this point in time, just how significant is OPEC's role in particular in stabilizing or destabilizing the global oil market?
Well, OPEC's always been the benchmark, always been the stronghold of what, how we dictate oil prices and oil supply. And right now, the oil supply is tight on their end. There is room to go if there's too much of a higher price. But demand is picking up right now, and I think that's where we're going to see we'll probably see some relief or some change in the coming months.
Now, Carl, given the transition towards renewable energy, how is this impacting how OPEC may be changing its strategy?
Well, I think the Saudis said something here in Houston at the Syria event recently about how there's going to be change, there will be change, but it's not going to be as fast as we think it should be. And so when we talk about the change, the renewables, it's going to be more of a slower pace than a faster pace. 2030 was always the target, but that's really coming up quickly.
So non-OPEC oil-producing countries, they've of course played a growing role, as we've been kind of discussing. What's the relationship like? Is it a stable one? Is it a collegial one? What's your sense here?
I think, it really has to do with economics. These countries that produce oil that have always relied on oil production for revenue are really just trying to make sure that they don't get lost in the shuffle if we start switching over to more greener fuels or less fossil fuels. And so it's really imperative that they maintain price and show their commitment to keeping prices where they feel it's relative and important to them.
All right, Carl, now if I can ask you to get out your crystal ball, what are the major factors, do you think, shaping OPEC's oil production decisions in the coming years?
It's going to be demand. It's really going to be demand. As we see EVs grow, we've seen it starting to peak here a little bit in the U.S., maybe growing a little bit more in China. But as we start to see those countries really start to see an ease of demand, that's where OPEC, was going to start to say, hey, we need to balance our prices versus demand. But right now, I think demand is really going to start to grow, and we're going to see that pick up quickly. Now, we always have to worry about inflation, but I think demand is going to be the key going forward.
Well, Carl, of course, the tightening of supply sending up those prices. Give us a sense in real terms what this means for average consumers.
Well, I think the average consumer is going to see higher prices going forward. I think that plays into inflation. But on the flip side of that, I think Fed Chairman Powell said today, he said that there's a shortage of labor here in the U.S. And that's key because labor, what he means is that there's not many people going to really work, go more blue collar type of people. Those people are the people who are really using demand for gasoline, for diesel, and the consumers going forward. So we'll see that increase faster than slower. And that's going to mean higher prices going forward.
Got it. Well, thanks so much, Carl Larry, for your insights there.
Thank you, Poppie.